Hi, good evening, and welcome to another episode of the weekly market wrap. My name is Daniel Ang. Today, of course, is June 22nd, 2025, and we are into the last week of the month of June. And a lot of things has been happening since the middle of the month. We already knew that Israel has already attacked Iran, and Iran has been also been retaliating. And this has accumulated into last night U.S. involvement in this conflict as well. And we're going to spend a little bit of time to talk about it and then what impacts it will have on markets. We already got a preview of what may happen in the first few days of Iran's attack on Iran. Sorry, Israel in attack on Iran, and we're going to get more of the same thing. But I do believe that in the coming months, things is going to get a lot worse. Okay, because this is unlikely to be a very short war. Okay, so now, without much ado, let's get into the content itself. Now, before we do so, I'd like to remind you that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin financial products, of which the trading of these margin products do carry risk. Do understand your own risk tolerance before you attempt to trade any kind of margin products. And I'll be sharing you my views on the various markets, and do understand that those are my views and it's got nothing to do with the sponsor of this event, fact, IronFX itself. And it has no bearing on the sponsor. And of course, the content of this entire presentation has not been vetted by any regulatory body. These are purely my opinions, okay? So we knew that on June the 13th, uh, Israel has hit Iran in the wee hours of the morning, and both have actually exchanged retaliation. Last I checked, Iran has actually launched wave and wave of drones and missiles that has penetrated Israel's famed Iron Dome uh, 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 program. Okay, so we can see that Israel has also, for the first time, come under massive attack, and I think they have largely underestimated the ability of the Iranian to actually carry out strikes, not using fighter aircraft, but using drones and missiles. Okay, some of them has actually hit major facilities, and to that point whereby we have seen the devastation has been widespread to the point whereby they have actually called for help from the other Western powers such as UK, France, and even Germany to come and protect them. And of course, we also saw how the US has been ensnared in this conflict, and they have made themselves a legitimate target by actually carrying out a strike overnight by hitting all three Iranian nuclear facilities. Okay, and this ensure that this conflict here is going to get from bad to worse. Okay, so here we have Trump himself, okay, saying that a few days ago he said he has already approved plan to respond to the conflict, and this was already old news because as of yesterday, he has actually made good on those threats, and he has actually authorized a strike on all nuclear facilities within Iran. And although Trump has claimed early victory and say that all has been successful, and I personally do not believe that this will be the end of the story. I think there can be two possible outcomes. One is Iran sue for peace and come back to the negotiating table and surrender. The other one is Iran will strike out and lash out not only on Israel, which currently, as we are speaking, one more wave of attack is en route to Israel. The other thing that could happen is that Iran may actually hit US military bases in and around the Middle East. Okay, so this thing can get from very bad to really, really bad. Okay, so stay tuned to development because I think it will have massive impact on financial markets in the coming days and perhaps weeks and months. Okay, so just be aware that this is serious. Now, this is what we saw yesterday, all three major cities in which the Iranian has nuclear facility, Isfahan, Fordow, and Natanz. These are the three areas in which Iranian are known to have nuclear facilities. All have been hit by uh, bunker busters. Okay, these are weapons that can actually create earthquakes. Okay, if they detonate. So not sure what are the extent of the damage. I'm sure the Iranian will have done something to prevent maximum damage, because this is not the first time the US has actually threatened to bomb these facilities. Okay, so I'm sure they may have taken some kind of defensive posture, or maybe move some of their major equipments and resources into other areas, knowing that these are prime targets. So the response from Iran is going to be critical, and we will judge how serious the situation is by what kind of response, if any, that the Iranian will be undertaking in the next few days. Okay. So as far as economic data is concerned, we have retail sales. Now, retail sales, you can see there are two basic colors here. We have the retail sales, we have actually plunged, okay, into negative 0.5 from positive 0.1. So this is finally coming in to reflect the real situation. Now, the April number did not uh, 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 although it has climbed down from a high in March, okay, that was because the world has been responding very much to what Donald Trump may do in terms of tariffs. So there was a lot of front running, whether it's consumers stocking up or companies stocking up stocks before the Trump announced the Liberation Day tariff. So that spike in March is a reflection of perhaps the front running. Then, of course, come April, those who have already stocked up will stop buying, and that is the reflection that we see hardly any growth in retail sales for the month of April. And for the month of March, you can see it's actually plunged to negative 0.9, which is really bad. Okay, so I'm sure in the months ahead, for the month of June, by next month when we get to see the June numbers, it will be likely to be even worse. Okay, now of course the control group did not reflect this situation just yet, okay? But I'm sure in the months ahead, it would likely be joining the hardcore retail sales number in negativity, okay? So just be aware that if this is the case, and I always mention US is a consumer economy, if retail sales tank, it will definitely show up in the GDP, which is already in negative territory for Q1. Now, in the coming days, and which I mean this coming week, we will also be looking at the last estimates for the Q1 GDP, which was last as revised down to negative 0.2. So it's most likely to stay in negative territory. And what we are most interested in is Q2 numbers, which we will know in July. So July is shaping up to be a very critical month. So be aware that going into the end of this month, expect more volatility, and expect even more volatility in July, because not only is the economy struggling, we also get to know what will happen after the 90-day pause that President Trump has announced. And remember, that 90-day pause is coming due. The earliest will be July the 1st, the latest will be July the 9th, depending which date you adopt. Okay, so at, at this moment in time, President Trump claimed that he has a deal with the UK, although we have not seen anything being signed. Likewise, Trump has also mentioned that he has a deal with China. Okay, but again, what they agreed a couple of weeks ago in London was a framework for further negotiation. Although I think the Americans has actually gotten a concession from the Chinese in terms of their export control on rare earth minerals. And I think China is willing to go along for 6 months to actually expedite the export control for rare earth element, purely for commercial purposes, because rare earth is actually dual use. And if companies that import Chinese rare earth minerals ends up in the production of weapons, that will be a serious violation, which I think India has actually violated at least five of those guarantee that they give the Chinese in exchange for the exports of rare earth. So I'm sure the Chinese is going to take very serious action on India for actually abusing their guarantees given to the Chinese for the privilege of actually being able to buy rare earth minerals from China. So we will continue to monitor this, but like I say, July is shaping up to be a terrible month. I believe it's going to be super volatile. We have not only the 90 days pause, then we need to see how President Trump is going to respond for countries that have not had a deal with the United States as far as tariff is concerned. And then we also have the deadline coming up fast for the refinancing and rolling over of short-term U.S. Treasuries. Okay, we all knew for the month of June, U.S. needs to at least refinance something like $6.5 trillion worth of short-term maturing treasuries. We have no solution for that yet. At least the US is not telling us how they are going to solve that problem, because if they cannot manage to refinance, they are likely to be heading towards a default. And talking about default, we also have a looming national debt limit cap that need to be negotiated. President Trump is in favor of totally removing that limit. And I think for the first time, Congress may actually go along with them, especially the Democrat Party. If they manage to remove the cap on the ability of the US Treasury to continue to borrow, then it will actually remove all guardrail on the US expenditure. Okay. And of course, we also knew that a lot of other things are also happening on the side. We have the Genius Act being passed by the US Senate, and President Trump is urging the House of Representatives to quickly pass the bill so that he can sign into law, whereby allowing issuer of stablecoin to be able to buy US treasuries. Okay, so this is crucial. Everything is all tying up to a crucial month of July. So July is going to be highly volatile. Okay. Then of course, this is no surprise here. We have the FOMC meeting that was held the day before the Juneteenth holiday, and there was no surprise here. The Federal Reserve kept their interest rate at 4.5%. The Fed chairman has come out to say that he believes that the uncertainty surrounding economic policies may actually be inflationary. So he wants to be able to monitor it for a couple more months. Although whether it is a CPI or whether it is PPI, it has not shown up in data suggesting that inflation is an issue. But I'm sure going forward, the Federal Reserve will be very concerned, because things like this will take time to work its way through the economy, and the data may actually come in 5 to 6 months after the fact. Okay, so to the point whereby how much countries will be slapped with tariff. Now, President Trump has changed his tune, saying that he is not waiting for countries to come to him personally to need to read to negotiate. Okay, so he is going to dictate how much each country is going to be slapped with in terms of the tariff. Okay, so that is something that the Fed chairman has been very concerned. If the tariff is anywhere near what he has been telling us, it will be catastrophic, and it may actually cause not only a deflation in the United States, it will actually slow down the entire global economy. So now with all this economic stress, and of course the geopolitics adds in, is going to be a very volatile mix. Okay, so let's move on. And for the week itself, we can see that the Dow Jones did not really do anything. Okay, it has been relatively stable, but this could be the storm before. This could be the calm before the storm. So the Dow Jones itself is hovering at 42,200 there, but hardly moved this entire week itself, waiting for something to happen into the new week, now that we know that US has involved himself in the conflict between Israel and Iran. The S&P 500 actually gained some ground, but not very much. It is still just under 6,000 points. And we can see 6,000 points is not awfully far away from the all-time high at 6,147, which we saw just 3 months ago. Okay. So we can basically see that market is right now in holding pattern. But tomorrow when the market opens, just watch out how the electronics section behave. I think it should give us a clue as to where the market could be heading. Okay. And in Nasdaq 100, it actually gained ground. The Nasdaq 100 is at 21,600. It's actually gained marginally. And the rebound in the Nasdaq 100 has been the most impressive. We can see that at 21,626, it is less than 1,000 points away from the all-time high. Okay. And this is actually something that we continue to watch, whether the Nasdaq will continue to take out new highs despite the very, very poor fundamental that we are facing. This is nothing to do with economics anymore. I think it is the momentum behind this move here. If ever the Federal Reserve gave what the market wanted by cutting interest rates, which cannot be totally ruled out, okay, because this past week we have Christopher Waller, the Fed a Fed governor, openly saying that he do expect perhaps the Federal Reserve to actually cut interest rates next month. Okay, so that actually has kept the market very much in expectation that there may be some members of the FOMC that may be actually wavering on cutting interest rates. So we will continue to mention that if there ever there's going to be a rate cut by the Federal Reserve when none is expected, then it will create the explosive move to the upside. Okay, so technically later on when we go into the chart, I can show you that the technical outlook for all US equity index, including those in Europe, remain very, very bullish. Okay. So the US Treasuries actually dipped, okay, from just under 4.5. It has managed to come down a little bit down to 4.376 this past week. And we can see that overall, in the yield itself, after hitting a low last September, we can see for the last 9 months or so, the US Treasury yield has been more or less trading higher. Okay, although the high was actually at 4.809%, just 1 week before President Trump's inauguration. And since then, the yield has actually come back down, but it's still very elevated. And I think the Federal Reserve, or rather the US Treasury, is fighting against time to get the yield down so that when they roll over the new issues of short-term treasuries, they can actually buy them, they can actually finance them at much lower yield. 4% is actually pretty high, okay? So the 10 years treasury yield has what we call the free money because a lot of people use the 10 years treasury yield to judge, okay? And in the US, the US mortgage rates is actually very much correlated to the 10 years treasury yield. We knew in the States, mortgage rate is at above 7%, which is very high, which has been negatively impacting the real estate markets in the States. So this continue to be a drag on the US economy. Gold uh, actually respond to the upside upon news that Israel has actually hit Iran. So we knew that there were a lot of to and fro between the two nations, and both have actually been firing at each other over the skies. And we can see on a close-to-close basis, the spot gold actually had the highest closing price in its history. Although the high traded intraday was $3,500 per ounce, on a close-to-close basis, how the market closed on Friday was 3,368 is actually the highest closing we have ever observed in spot gold. So gold remains very much to the upside. We can see year to date is up 28%, very much in line with what gold has been doing for the whole of 2024. So we are only at the halfway mark for 2025, and gold has already appreciated marginally higher than what it did for the whole of 2024. So the gold is definitely on a trajectory on the basis whereby if there's more attention in the geopolitical space, it's very likely to see gold trading much higher. But be very careful because everybody now is on one side of the market, meaning to say most people are bullish, and that create a condition for a sudden reversal. So do be very close. be very tighten your stop basically. Okay, make sure you take more precaution when you are chasing precious metal prices higher, because like I said earlier on, when the whole world is on one side of the market, it's very easy to topple it. Okay, so just be aware that the possibility of a sudden unexpected reversal can be quite catastrophic, but it will not likely, in my opinion, to damage the overall bullish outlook. If there's going to be if there's going to be a pullback in gold, for example, into $3,000 or maybe even lower, that to me is screaming to be bought. Okay, just be aware of this. Okay, I noticed there's a couple of questions. One question here. Sam is asking, gold is not has not reacted to Israel and Iran war for past week. Is this just going lower until Friday U.S. sessions? I think it has already reacted. In fact, when Israel launched the first attack on Iran on June 13th, we already saw that gold has reacted, but it did not follow through. Okay, either it is because of a shortened trading week in the US as they celebrate Juneteenth holiday, or that was before US participation in that war. Okay, so because the most of the major move all happens in the weekend where markets are closed, so we don't have a chance to actually gauge the reaction. But tomorrow morning when the Asia market opens, it will be very telling. I suspect it is going to gap higher. Okay, and whether it can stay elevated remains to be seen, and whether we're going to see some contrarian selling emerging during the London session or even the New York session. Just continue to monitor, because there is a very a big risk. Not only will gold react, I think crude oil will also react to the upside. And in the morning session, just watch how Asia equity markets, in particularly Japan and Hong Kong, reacts to this overnight development with the US now joining in the fight. Okay. So here we have crude oil. Crude oil right now has actually beginning to surge. Now the surging seems to be gaining momentum. Uh, we can see at the beginning of last month, crude oil traded to briefly below $60 per barrel, and we can see that now it's in the mid $70, which is actually very sharp recovery. We have already seen a $20 recovery in the crude oil prices, which is massive. And if this continue to trade higher, which is very likely, especially if Iran closes the Straits of Hormuz, which is a bottleneck in the area, whereby 20% of all crude oil passes through. Okay, if Israel actually shut down the Strait of Hormuz, very little oil is going to be able to reach the international market. It will, for one, cause price of crude oil to escalate. But I think more importantly, it will also be a deterring. It will also be a negative for China and countries like Japan that imports practically all their energy needs. China buys 80% of Iranian oil, and if Irans are not able to export, China will have to look elsewhere for new supply at much higher prices because of the tension in this space here. So by and large, if the end result of this war between Israel, Iran, and the US result in massively higher prices, it will not be surprising. In fact, some analysts are beginning to talk about $100 oil again. Okay, will this be the catalyst that cause oil prices to surge beyond $100 per barrel? Very likely, because personally, I do believe this is not going to be a short war. We do not know to what extent other major powers may lean in. Uh, if Israel, I don't know, if the Russian or the Chinese decided to take a stand, okay, that may complicate matters. And just be aware that this war currently is all about stopping Iran from getting the bomb, where the IAEA has already certified that Iran is not able and do not have the ability to do it. Okay, but they ignore the IAEA stand, and now they have decided to go ahead and bomb the nuclear facilities. In fact, Trump himself has actually dismissed his own intelligence, the head of his intelligent, okay, saying that he he don't care. He says the U.S. intelligence are wrong about the fact that Iran do not have the bomb. Okay, so he has actually gone ahead and taken a stand against the people that he actually appoints. So it's quite a remarkable development whereby there is the possibility the people that are working within his administration may start to desert him. Okay, that if we ever hear any kind of news saying, okay, his head of intelligence decided to quit and doesn't want to get involved in this conflict, then that will be a major, major blow to the Trump administration and to Trump personally. Okay, so whether that will be a case whereby we're going to see a spat of desertion of his key appointment holders, that will be the clearest we can see that nobody is supporting his stand on Iran. Okay, so again, things can actually turn uh, drastically in the next few days and months. Okay. There's another question here being posed by Anonymous. Seems that higher crude oil prices have also elevated some oil-related stock. Should we consider to go long some oil-related stocks now? I do not give advice here, but if I am somebody who is doing stocks, I would naturally consider that because they are related. So it could be something that some equity traders will be considering. Okay, but like I said, you guys know I don't trade equities, but it is very logical to thus conclude that with higher oil prices, oil-related companies should do well in this current climate. Okay. So here we have the dollar index. The dollar index has actually closed a lot weaker than what the chart here actually shows. We can see that the dollar index is already down 9%, and we are possibly heading even lower. Okay, although there was some buying in the dollar uh, towards the end of the week itself, whether that will be the case going forward in the next few days, where dollar can act as a safe haven, but right now, nobody seems to be looking at the dollar as a safe haven. They look at the fiscal condition of the US government, saying the US has not been very disciplined, has been piling on more debts. So obviously, the dollar is not going to be viewed as a safe haven, but there could be the knee-jerk reaction in buying of the dollar. So that should actually be something that we want to consider. But by and large, I think the buying has been more on the Swiss francs. Like I said last week, the Swiss franc seems to be benefiting from all these talks about the dollar going down. So, money managers have to park the money somewhere else. And in the absence of a viable currency, it does looks like investors are finding solace in gold, in Bitcoin, as well as in the Swiss francs. Okay, so we are going into the 26th week of this year. So let's go into the chart itself. So if you have any question, do post them into the chat group so that we can address them as we go along. Let me share with you my chart. So here we can see that I want to show you the Dow first, okay? So obviously we are coming towards the end of the month. Okay, this is how it looks like so far on the chart here for the monthly time frame for the Dow. We can see that this month there was an attempt to go higher, but we still have one more week to go before the month end. So as the moment itself, it does look like the Dow is not reacting positively too much to the upside. In fact, it has been the laggard among all the major equity index. In terms of the US equity index, the Dow seems to be the weakest link, although it has recovered very sharply from the low at 36,500. It has seems to be losing a bit of momentum in this month itself. So if there's going to be any logical conclusion, is that war is definitely not going to be an environment suitable for risky assets, and stock being risky assets may actually dip further, but it does not compromise the entire very bullish outlook in equity markets. Although the US has been not performing as well as the European equity markets, but by and large, you can see that the bullishness in equity markets has not been damaged. Okay, there is the possibility we may see lower prices going ahead in the next few days and weeks, and that could be a reflection of the elevated tension in geopolitics. Okay, and of course, other factors such as how the US is going to respond to the looming debt ceiling negotiation, as well as how they're going to be able to resolve the maturing $6.5 trillion in short-term US treasuries. Okay, all these are going to be affecting the markets. In the coming week itself, we have, I believe, on Tuesday, we're going to have the S&P Global Purchasing Managers Index numbers. But I think more likely the one that will move markets if there's going to be any drastic change in the Q1 US GDP estimates, because this will be the last and final estimates before we go into Q2. Okay, so by and large, we can see that the Dow Jones itself, okay, based on the money time frame, remains very positive. Here, this is the weekly time frame. You can see there was a big sharp drop from 45,000 all the way to 36,500 before we see a sharp bounce. But like I said, this week itself, since the prior week high at 43,151, the market seems to be in holding pattern. That can clearly be seen in the lower time frame. Now, this is the lower time frame. You can see market attempt to go higher the week before, and it lost some steam, and yeah, the market attempts to recover on Friday, and this is of course before news broke that US actually participated in bombing Iran. So possibly we may see lower prices going ahead, at least in the first 24 hours of the market opening tomorrow. Okay, so in the lower time frame, this is what we are seeing, that is beginning what looks to be a corrective pattern, and this could be the counter trend, and this counter trend may last a little bit longer, but it will not affect, in my opinion, short of a total crash in prices, it will unlikely to impact the bullish outlook in the Dow, despite the Dow being the weakest link. Okay, in the S&P 500, we see more of the same. This is the monthly time frame. Monthly time frame, you can see that the performance of the S&P 500 is a lot better than the Dow. We can see that at least it is positive. Okay, not very far away from the all-time high of 6,150. So if there is no slowdown in the coming weeks, there's a possibility of a new high in the S&P 500. All things being equal, technically speaking, this market has maintained its momentum. So based on momentum alone, it does look like it's possible to break into a new high for whatever reason, okay, despite the very poor fundamental that we are facing today. Okay, so this is the weekly time frame. You can see that the counter trend has been eliminated. So now the market is resuming its run to the top side. Okay, so here again, does not take into consideration what happened over the weekend, and there is every possibility we may see lower prices in the next 24 to 48 hours in reaction to news that US is now officially at war with Israel, with Iran. Okay, so in the daily time frame, we don't see very much. There is possibility of a three-way minor pullback here, but again, the overall pattern remains very bullish. That can also be seen in the 4 hours time frame. You can see this is a very shallow pullback. Of course, it cannot rule out the possibility of a very sharp drop, but even that is the case, unless price take out 5,430, it is highly unlikely it will damage the overall bullish outlook in the S&P 500 as well. Okay, so the most bullish, oh, what did I do? Hang on. Okay, the most bullish outlook seems to be the Nasdaq 100. Okay, here we have the Nasdaq 100 looking very bullish. You can see that the high this past week is at 22,085. Okay, there about very close to breaking the all-time high. So there's going to be one market that will break the all-time high in US equity market. It looks increasingly to be this Nasdaq 100. So of the three that I've shown you, this particular index here is by far the most bullish looking. Okay, so if you have a stand that you believe that US equity market is going to break new high, the first sign is most likely going to come from the Nasdaq 100. Okay, although this past week we can see there is no serious challenge of last week high, but we can see that on a close to close basis, it is still closing positive. Okay, for the week. Daily time frame, you can see that there's a very small corrective pattern. Most likely it will extend lower first before it finds its feet, but by and large does not damage the overall look and feel. Okay, this is the 4 hours time frame. If the market can drift all the way down to 20,600 to 20,850, that could be a good catchment area because this is from where the market actually bounce again. Okay, you can see that the market actually go up, come back down, found support, and bounce. So obviously this area here, okay, I believe is this bunch of prices here is likely to be where the buyers may re-emerge if the market ever go down as low. Okay, so this could be one good area to watch for sign that they will be buying interest coming up from those areas. Any question for me? Looks like there's no new question. I will continue. Now I will move into the European markets here. Here we have the DAX, which is maintaining a very bullish outlook. We actually have a new high for this month and 24,471 and a half in the DAX, which is the German index. Although it did close currently, we have one more week to go before the month end, but we have seen that the market has actually given up quite a fair bit of its gain. In fact, it has pulled back about 75% from last month rally. So by and large, there is a possibility of further weakness going forward. You can see there are 2 weeks of negative growth in the DAX, okay, and this could be a reflection of what's really happening in the Middle East, okay, because the market actually was going very strongly until June 13 came in, okay, so this market fell off in reaction to the tension in the Middle East, and this week closing is a expression of the same, okay, so it could actually go down a bit more in the coming week itself. So we will continue to monitor this if you guys are trading German equity markets. This is the daily time frame. We have seen one leg of a pullback. If we're going to see a bounce not exceeding 24,471 and a half, it will probably lead to at least a classical three-way pullback targeting somewhere here. Okay, this low here at 22,237 and a quarter could be one good area to actually see if there's going to be enough support. Okay, and if that's the case, then the lower time frame could actually offer us a buying opportunity because if the market can go all the way here, somewhere between 22,200 to 22,500, that area could actually be a catchment area. Remember, you can see that there is this area here, very obviously, there is some kind of support here. Okay, so if the price continue to move in this trajectory, a bounce not exceeding 23,883, followed by another dip below 23,021, then it could actually lead to a move towards the lower end here at the 22,200 levels. Okay, so if that's the case, that could present a buying opportunity. And then, of course, we have the FTSE 100. Here in the higher time frame, you can see FTSE attempts to take out the all-time high, not quite able to do it. Okay, it failed by 0.03 points. Okay, the high traded was actually a few months back. Okay, in the month of I believe February. Okay, 8,909.2. So this past week itself, we see an attempt to rally, but so far it has not worked out very well just yet. Okay, and we can see this is the weekly time frame. This week itself, there was a challenge, but did not quite make it. So the price are closing. This bar alone is actually quite negative looking. Okay, this bar is we have a higher high compared to the week before, and we have a close that is lower than the past 3 weeks. So this could be suggesting near-term weakness. These two bar in combination looks like suggesting lower price ahead. There could be some kind of profit taking in view of the tension in the Middle East. So technically speaking, this bar, the way it closed this past week, suggests that we may see lower prices. Okay, so if the price do come back and retest the low here at 7,531, this bracket of prices previously offered support. So if price ever come back into this area, I suspect it will also come back. We may see the re-emerging of buying interest. So by and large, it does not compromise the overall look and feel of this very bullish market here. Okay, so we can see prices has a lot to go if it ever wants to correct. The first solid support will be this line over here, the edge of this green box at 8,450 or 456, 8,456 could be offering very solid support. Okay, so watch out for this level. In the 4 hours time frame, the way it closed over the last on Friday suggests that we may see certain weakness going forward. So far, it's only a three-wave pullback, and this three pullback could actually go all the way to test this bracket of prices. And this bracket of prices is here, 8,005 to 8,006. Okay. So if we ever get a chance to position buy, just be aware of the background noises such as the tension in the Middle East that could actually spoil the game. But for now, technically speaking, it does look quite bullish and supported. Okay, we are done with equity markets. Now we look into the Asian markets. We look at Nikkei. Nikkei has actually done relatively well this past month. Okay, we have the monthly time frame. This is the monthly time frame. You can see that 3 months of rebound from the low of 30,000 357 is still ongoing. Remember, the top side resistance is at 40,000. Right now, we have a market close at 38,400. So the market will definitely want to try it again 40,000. If we still not able to hold above 40,000, what I mean by that is a close, a convincing close above 40,000. Very likely we will see sellers coming back into the market for the Nikkei 225. Okay. This is the weekly time frame for the Nikkei. We can see the prices has slowed down. Okay. Over the last 3 to 4 weeks, you can see that the gain is not very, very aggressive. Market is testing water to see if there's any kind of stops above, but it has been very cautious trading. You can see the size of the individual candle is they are all very short, okay? Not like the phases here, we can see very aggressive mode. It is not aggressive at all, but I think is the market way of testing if there's going to be any significant stop that it can trigger, okay? Above 40,000 is where I think the last area which the Nikkei have actually met very serious resistance. Okay, so if there's going to be a try of the 40,000, watch for closing first on a daily basis, then on the weekly basis. And if we see a successful close above 40,000, that could be the first time we see solid gain in the Nikkei 225. Other than that, I think it is likely to be coming off again. Okay, in the daily time frame, we can see that the market has no counter trend. Okay, so the market has actually turned positive. Once the market break 38,774 to a high of 38,980, that has actually eliminated the counter trend from here to here. Okay, so right now we are in a very strong move on the daily basis. The market has turned positive once again. Okay, however, I won't rule out the possibility that this is a test of this high here. The market actually went beyond this high here, which is at 38,774. Finding nobody placing buy orders here, the market come back down. That could be a fake move here. This could actually represent a fake move. So far, we have inside bar, okay? And if prices can breaks out ideally to the downside, it shows that there is this move here is more like testing the water, okay? Is technically a fake move, in my opinion. Okay. So in a 4 hours time frame, we can see that we are in that bit of a counter trend. So the counter trend can go on for a little while longer. So there you have it. The counter trend is currently in place, but you can see that the massive green color box signify that the market is very, very bullish. Anybody got any question before I move on to the move on to the Hang Seng? So I'm going to show you the last equity index here in Asia, which is the Hang Seng Index. First, again, I want to show you the monthly time frame. So far, there's been no new high. The last high here that we saw was in March of this year, okay, in which the market unfolded in a three-wave move, hit its target, and now it actually sell off before the market rebound again. So there is nothing new in the Hang Seng, but overall, it's still maintaining somewhat of a bullish uh, uh, stand. But this bullishness is part of a counter trend rally. The market dominant trend is actually down, okay, in the Hang Seng. So this bounce that we see from just under 14,600 is can only be seen as part of a corrective bounce so far, unless it extend very aggressively. okay, which is currently not, we don't have any sign that it will, but if it ever does that, then that will be something different. But so far, we can only see that this bounce from 14,600 is part of a corrective bounce, okay? So I'm going to maintain a somewhat bearish outlook in the Hang Seng. So in the weekly time frame, we can see that this very clear three-wave bounce, okay, uh, met its support here. So if I'm going to expand this to let you see, this area here is this bar. This entire bar here represents area of demand, okay? Because when the market went up here, it come back down, retest the low of 19,047, it bounced very sharply. This single bar here, okay, happening on a weekly basis is proof that there is very strong buying interest emerging out from this bracket of prices, okay, from 18,700 to 20,000. So this area is already known or proven to have shown that there are massive buying interest accumulating in this bracket of prices. So in the coming days or weeks, and if we see a pullback into this bracket, expect these same people who have been buying to possibly show to surface again. Okay. So on the 4 hours time frame, we are in the midst of a corrective move. This corrective move could actually move lower into 22,400 to 22,700, because this is also an area of support signified by this single bar here. Okay, let me show you. You can see that this is one single bar. This single bar is where I think the demand is. Okay, and the price gone up, come back, bounce off this area from 22,650, which is basically within this bracket of prices. Okay, so looking at the entire price action here, it does looks corrective. And if for some reason we can see the price slowly falling into this bracket, the buying interest may re-emerge from this place, 22,400 to 22,700. Unless, of course, we have a very sharp catastrophic waterfall collapse in prices. If that's not the case, if the market continue to slide lower and lower with very little momentum, then I think this area will be a good place to look for buying interest. Okay, I finished the Hang Seng. Uh, so you're gonna tell me what you want me to talk about. So if not, then I will be moving on to currencies. Okay. Okay, I'm showing you the dollar index. So this is the dollar index for the weekly time frame. You can see that this three-wave move is part of an ABC. So if you have not already sold, downside potential is going to get diminished as we go along. Okay. So far, I still maintain that the overall look and feel of dollar. Remember, the bigger box here is the green color box, suggesting that this dominant trend is very bullish for the dollar. And what we've been seeing for 114.70 is part of a large degree three-way pullback, targeting somewhere at 94.5 to 95. Okay, so as it goes lower, currently it closed at 97.7. Okay, but on a close-to-close basis, we can see that the way it closed, this is the weakest closes the dollar index has in the last 3 years. So immediate weakness is cannot be ruled out. Okay. However, we have to understand that if there's going to be any knee-jerk reaction to safe haven buying as a result of the situation in the Middle East, it is also understandable. Okay, because this market closed before the US actually joined into the conflict. Okay, so if the market bounce, okay, it will not be surprising. But I think generally speaking, if all things being equal, I think there's possibility we can see lower dollar rates. Okay, and then in the I better remove myself. It's irritating now. So this is the daily time frame. Daily time frame here, we can see that the market is predominantly bearish. Okay, the market here has a 1, 2, 3, 4, and a break below this low here has already happened. The previous low here at 97.669 has been broken at 97.58 on Wednesday. Okay, so the way it closed on Friday suggests that we may see lower prices, but technically the 1, 2, 3, 4, 5 has already unfolded, because all I need is a move below the low in the wave 3, which is 97.669, which we already saw on Wednesday. So the momentum wise, suggests that we may see lower prices ahead. But again, remember, we are getting very close to the tail end of this move. Once we finish this five-way structure here, somewhere around 95, there is a possibility that the market may stabilize, and then we will see a new trend altogether. Okay, long term, I am very bullish on the dollar. Okay, although we have seen lower dollar rates for the last 3 years. In the 4 hours time frame, this this counter trend that we saw from the low of 97.59 may be broken out in the next few hours. Okay, uh, uh, assuming Monday opens with dollar continue to trade lower. Okay, so again, look at a higher time frame. The daily time frame has been very revealing because it does look like we have a five-way already. Okay. So in terms of the major currency pairs, the euro dollar is a mirror image of the dollar index. While we see a ABC move in the dollar index, we are also seeing an ABC, but is a inverse. Okay, ABC in euro versus dollar may be targeting anywhere between 1.19 to 1.2. Okay, so right now when the market is 1.15, so top side doesn't have a lot of meat left. Okay, so you can still continue to trade to the upside in terms of buying euro dollar, but it is the potential risk is that it's going to be quite limited. Okay, so this is the weekly time frame. The ABC here is actually quite clear cut to me. Okay, targeting 1.19. Okay, so now we are 1.15, 1.19 is only about 400 pips. Are you likely to be able to want to go for this 400 pips? I suppose you can if you are doing short-term trading. Okay, the momentum suggests that we may see higher euro dollar rates because we are seeing uh, uh, lower US dollars. Okay, so this is the daily time frame. 1, 2, 3, 4, 5. You can see the high here, the week before at 1.163 is already marginally higher than the previous peak here at 1.1573. Okay, so technically we have a five-way structure already in place. Whether this five-way structure will extend all the way to the ideal target of 1.19 remains to be seen. But I think overall 1.19 is about the best you can expect. Okay, for this entire series of prices from 1.1980. Lower time frame continue to trade to the upside. Right now, in the 4 hours time frame, we are seeing a three-way pullback, and it could evolve into a more complex corrective pattern. But by and large, you can see this bunch of prices here, anywhere between here, I think there is going to be support. Okay, this area is 1.1365. Okay, so you can see a bunch of prices here seems to be able to hold the market rates. So if we can see lower prices, especially if it falls out in a larger degree three-way, targeting anywhere near 1.136, I think that could be a good area to consider, or rather to look out for buying interest. Okay. In the sterling itself, let's take a look. Sterling looks quite similar, but not quite the same. Okay. Here we have the monthly time frame. It does look like it is also unfolding in a three-wave with the potential to challenge anywhere between 1.42 half to 1.4375. So anyway, these two top tiers are just going to be the immediate concern. Currently, the high traded this month is 1.3632. Okay, so based on this, again, quite limited potential. Okay, because the immediate hurdle is 1.42 half. In the weekly time frame, you can see this three-way move. 1.42 half is not that far away. So if you continue to chase to the upside, just be aware 1.42 half in the sterling versus the dollar is about all it can do for now. Okay. Dollar index, sorry, the daily time frame is coming in as we have seen a bit of a counter trend emerging. So we possibly could see immediate continuation of this counter trend, knowing full well that there is support hovering here. This is the 1.1340 area. Okay, this is one good area to look out for potential buying interest. Okay, so if the market continues to drift, this area here could be a good area to consider. Okay, if you have not already bought. So this is the 4 hours time frame. Right now we can see that this is a 1, 2, 3, 4. Is there an overlap? Let me see this. Is there overlap? 1.16. No overlap. Okay. So as far as we can see, this could be one, two, three, four, because there's no overlaps with wave one, then there's a possibility of one, two, three, four, five, and then if the market goes into this bracket, it could be a good area to pick up some sterling. Okay, this is an area of potential support here. Okay, all I need is a marginal low, minimally below 1.3382. Okay, to fulfill the five-way structure here. This could end up to be the wave A of ABC. Okay, for all I know, but here where I do expect prices to be able to stabilize. Okay, but I'm not looking to trade currency for this coming week because I think the action could be in energy markets, could be in precious metal markets. Okay, so when we look at the other currency pair, let's take a look at the dollar versus Swiss franc. Like I said, Swiss franc right now is playing the role of the safe haven. Dollar has been coming down. That means to say the Swiss franc has been getting stronger. Okay, and on a month-to-month basis, we can see in March there was a very massive uh, 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 rally in the Swiss franc at the detriment of the dollar. So we can see this big drop here in the dollar versus the Swiss franc could still be continuing. Okay, although there has been no follow-through selling in the dollar versus the Swiss franc, but I think for now, I think everybody feels a lot safer buying the Swiss franc rather than buying the either the US dollars or the Japanese yen. Because the Japanese yen is not going anywhere. Okay, so in terms of safe haven currency, it looks like the Swiss franc will have to carry the weight. Okay, so lower prices is likely to be the case, knowing that there was a very strong rebound at the 0.7575 levels. So as the market drift lower, this area anywhere between 0.7 to 0.76, okay, is going to be where I suspect the buying interest may re-emerge because from the Swiss National Bank point of view, having a strong Swiss franc is not what they want. Okay, so in the weekly time frame, you can see clearly the market is still falling, and if the market do break below 0.76, that could be a different thing altogether. But I don't think it will drop that far. Okay, even if they come close to 0.7570, I think the buying interest will start to re-emerge. Okay, top side is very clear. Top side is 92 cents. Bottom side is anywhere from where the market is right now all the way down to 76 cents. Okay, so I'm not going to show you the lower time frame because it's more the same. I want to show you the Aussie. The Aussie has been rebounding. Okay, so this is the monthly time frame. The rebound in March is actually pretty strong because 59 cents seems to be the buying interest is coming in. But this past month itself, we can see that there is not much of a follow-through buying in the Aussie dollars. Okay, because the Australian economy is has the potential to slip back into recession. Okay, so if that's the case, it does not warrant a very strong Aussie dollars. In the weekly time frame, you can see that what we are seeing here is a bit of a corrective bounce, but it doesn't show us a lot. Okay, you can see that the market has no strength to go up higher. For this entire week, okay, we can see that it actually closed lower. There was a marginal high compared to the most recent high that we've seen. But the fact that it closed on a weak note suggests there is no much strength in the Aussie. So I'm going to leave the Aussie white. Meaning to say I'm not going to take any position in the Aussie because technical outlook doesn't seems to be supportive of very much higher prices. I want to see explosive prices, but it seems that Aussie is not. The Aussie has been doing like this since the whole of March. Now we are into the last leg of June. It does continue to show that there's no impulsive move here. So I personally do not like a market like this. So I'm going to stay away from the Aussie market. The Kiwi looks very similar. Want to look at the Kiwi here. Yeah. Kiwi on a month-to-month basis has also rebounded. Obviously, there is that triple bottom here, 1, 2, and 3, and market seems to be holding the line at 0.75, 0.55 area. Okay, here is 0.54 60. Okay, so these three legs here suggest that there is buying interest here. Either that or maybe somebody is defending the Kiwi at this level. Okay, so mm, not much of a follow through buying so far this month. It looks like it's going to be very similar to the price action in the Aussie. Similar, we have a marginal high on a weekly basis, but it closes weak. So there's no momentum in the Kiwi as well. So I suspect the money is not in currency these coming days. Okay, they are all moving into consolidation, and even if the market continues to move in its own momentum, upside potential is getting limited. Okay, so this is the daily time frame. Not much of activity here. Nearby support is at 0.58 half. So Kiwi, nothing exciting. Is there something to be seen in the Canadian dollars? Not much, actually. You can see Canadian dollars hit a high of 1.479. Okay, I mean the dollar versus the candy. Okay, so we have a bit of a corrective pullback here. Overall, the entire currency market doesn't look very exciting to me. Okay, does not look very exciting. We have a very interesting move here. We have uh, so far it's only three wave, but this leg here is very sharp. Okay, so sharp that it is very close to 1.618, suggesting this is 1, 2, 3. And if the market bounce, okay, and cannot close above this level here, which is the potential to be uh, the 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 fourth wave, okay. So as the market goes higher, possibly this coming week, there's going to be a bit of a resistance around 1.40, dollar versus Canadian. Okay, so if the market goes up, struggle here, and then come back down, I think it's going to go and gun for this low here at 1.3540. The low here this past week is 1.3540. So that will complete a 1, 2, 3, 4, 5. Okay, possibly going down to 1.132. Okay, which is very much in line with this bunch of prices over here. So if that's the case, anywhere between here and here is going to be where I think the support is going to come from. So if I take them collectively using the two swing low here, it does suggest that there is possibly support, very near-term support here. Okay, let me see. Okay, that being the case, the market is at 1, 2, 3, 4, 5. I think somewhere around here. So if you're going to be doing currency, possibly something to be done in the dollar Canadian on a weekly time frame. Okay, but it's not very exciting in my opinion. Okay, here you can see it's even clearer. 1, 2, 3 struggle all the way up to 1.40, and if we cannot overcome, we'll come back down and take out this low towards these two bottom here. Okay, so there you have it. Currencies. There's one more question here I want to address. Sam is asking, the dollar index chart is so much different from other broker. Okay, this one is from IronFX. It can't be that much of a difference. Okay, but anyway, if you have a different version, if you want to compare notes, you can take a screenshot of that and show me. Okay, I'm done with currencies. Let's move into commodities. I want to go into gold. Now, gold is likely to be reactive. We can see that gold market has been recovering on a close-to-close basis. This is the monthly time frame. Okay, of course, we have one more week to go before the end of June. But so far, we have seen gold on a close-to-close basis is actually has actually registered the highest closing price ever in its history. Okay, this week we have a closing at $3,368.20 per ounce. This is the highest ever that gold has ever closed on a spot basis. But this is also an area which I've highlighted anywhere between 3,280 to 3,671 or even 672. Okay, this bracket is going to be an area that I'm very concerned. Prices seems to be okay. Of course, the high here, the all-time high, intraday high at 3,500 is a very nice round number. So that level does not surprise me, but there is that possibility the market may have to break through and close above 3,672 to be able to regain its upward momentum. Okay, so far it looks good on a monthly time frame. This market is very, very bullish. Okay, this is a 10-year high. Okay, the low here at $1,046 was 10 years ago. Okay, so this is the weekly time frame. You can see the weekly time frame looks like it is about to challenge the $3,500 high that we've seen, okay, in April. So here, this market did try a high of 3,451, okay, and then lose some momentum before it comes back down. But what happens over the weekend could change this. Tomorrow, I won't be surprised the market gap up, okay, on the lower time frame. If the market do gap up, uh, there is the possibility because it is a reflection of the fundamentals. Okay, but if not, if the market is allowed to trade, ideally, then I would love nothing more than for the market to pull back deeper. Okay, creating a three-way pullback, targeting anywhere between $3,070 to $3,000. That will be perfect because if the market can come into this area here with this low here that we see, uh, where I think the demand is going to come in. Okay, 2,960. That would be perfect because for those who have missed out buying, okay, since February, this could be the last call. Okay, ideally, I would love to see the market pull back to test the 3,000 and maybe even marginally close below 3,000. That would be perfect for me. Okay, because it does not impact or change the technical outlook for gold. It's still going to be very, very bullish. Okay. So that will be something I would love to see, but although based on what happened over the weekend, it's more likely to go higher than come down. But for whatever reason, okay, the market ever come down to test the $3,000, that would be a godsend. Okay, I would definitely be looking to add more to my positions. Okay, so this is what I think may happen in gold market in the daily time frame, in the 4 hours, for example, the market top side, if it breaks 3,005 and cannot follow through, this could be an area where the fake move may actually come in. Okay, so look out if the market go higher and then finding no follow through buying and come back down on a close basis, then this area here, 3,490 to 3,550 could be a prep. Okay, we need market to blow above 3,550 and close above that to at least confirm that the market is resuming its bull market. Okay, so far on the 4 hours, this dominant trend is down because the bigger box here is pink color, suggesting that the dominant trend in the short term is still favoring the downside. Okay, what I need is for the market to not only take out 3,005, but to close above 3,550. On the other flip side, the market goes down, the immediate support will be on this line here, this resistance support. So if that's the case, just be aware that buying interest starts to come in just under $3,300 to $3,245. So between these two prices here, that could be where the market could be seeing the re-emerging of buying interest in the short term. I can give you a different color. Look out for the horizontal support. Okay, this area here, roughly, okay? If the market comes in lower into this bracket between 3,245 to 3,300, for example, and it still sit above this resistance and support, that could be a very strong incentive for buying interest to, to re-emerge. If the market close back below this red line here, then obviously we're going to look at something further away. Okay, for now, I'm not considering this level just yet. Okay, just look out for this level. Okay, 3,245 to 3,294 or 95. Okay, I want to show you silver. Silver has been playing catch up. Okay, so silver, this is the monthly time frame. Overall, it is still bearish. And the high at $49.50 need to be convincingly taken out over time. But so far, the look of this move here is beginning to look okay, potentially able to do so. Okay. So I want to see this move here going above $44.21 on the monthly time frame. Right now, the market equality move from the low of $11 and 62 cents. ABC here, equality is somewhere between $36 and $40. Okay, the market uh, high so far this year is at $37.30, which is actually the strongest we have ever seen since 13 years. I think 13, 12 years. Okay, because the previous high here was at $37.47. Okay, so we are beginning to see the market challenging this level. Once it closed above this level, the logical next target to go for with $44.21. So it does have the positive outlook, although so far it is only a three-wave bounce. It is a three-wave bounce with no follow-through buying. Okay, then obviously it's just a corrective bounce. But I think based on what we are seeing in the gold market, we are beginning to see the buyers coming into the silver market. By the way, for the month of May, there has been a record uh, uh, deliveries for silver in COMEX. We have never seen so much silver contracts that ends up in delivery, because COMEX is actually a very speculative exchange. People only buy and sell for speculative gain. Very little delivery actually occurs in COMEX. But from November till last month, okay, we don't have data for June just yet, but from last month, we can see that there was a record amount of contracts that end up in delivery. Okay, that means there are entities that wants the physical silver. Okay, so that is something to consider. Okay, because it's very unusual for COMEX futures contract to end up in delivery. Okay, the fact that there has been an explosion in delivery as much as 700%. Okay, from normal. So that is telling us something has changed. There is people wanting the physical stuff rather than hold and buy and sell just for trading. There are people who actually want the actual goods. So this could actually provide the momentum if you consider the fact that there are so much delivery being conducted in COMEX. So that should actually underpin the market. Okay. So on the daily time frame, we have already finished that. We have already seen how the market can do a 1, 2, 3, 4, 5. So we have already taken out the $34.86. So technically we have finished, we have already have a 5-way structure. So the market right now is actually quite vulnerable to a pullback, a wave count wise. Okay. So over the last couple of days, we can see that there was a massive pullback here. The high at $37.30 end up with 3 days of continual losses. So that could set the stage for lower prices, technically speaking, if you count the wave. Okay. And if that's the case, market is likely to go back and test the $28 level to as low as $26. Because this is the end of the this could either be the end of this leg here or the fourth wave. The fourth wave is likely to be $38.34. So this could actually come down, test this level, bounce, come back down again, and then go down to $28. And that if market ever come to that level, you want to load up. I would be loading up. Okay. At $28 is a steal. Okay. Because considering that it's going to be the massive buying interest in precious metal markets. So in the 4 hours, we are seeing the short-term pullback. So when you are trading the metals, always refer to the higher time frame. The 4 hours, 1 hour, they are not very reliable. Okay, so do not make your decision based on your analysis on the lower time frame, based on the higher time frame. You stand a better odds of not being whipsawed. Okay, so that is my personal experience. Let me check if there's anything else you want me to address. Okay, there's a new question here. Dennis is saying, what silver price is good for long-term holding? I've just shown you what I think may be a good price to actually be looking to beat. Okay, this is the daily time frame. Let me come back to you again. Now, this is where the market actually stabilized the last time, anywhere between $26.40 to $28.30. Okay, so if this is the three-wave pullback after this high here, then logically the market should come anywhere here. So when we extrapolate, can the market go lower than $28? Is yes and no. Okay, not sure, because the demand is actually within this bracket of prices here. Okay. But if the market the first first level of support is likely to be $31.60. So when you refer to the short term, the 4 hours, okay, this area the market will have to conquer first. It must break below this level. Okay, but this is based on the 4 hours. Like I said, don't base your analysis on the 4 hours. It's definitely not very reliable. So I will stop my analysis at the daily time frame. So this where to look for levels to buy, I think I will depend very much on the daily time frame. First layer of support will be $31.64. If the market close below here, it will likely to go lower, ideally into $28 odd cents. Okay, that's where I will start to be very interested because once you finish a five-wave move, it's likely to follow by a three-wave or any kind of corrective pullback. Okay, if that's the case, the pullback could actually last a long time. Could be lasting maybe a couple of months. Okay, if that's the case, we have time. But however, when we consider the very fluid geopolitical situation, this time may be different. The market may not pull back that much. Okay, but if the market ever do, then this area here, okay, will be a good area to consider. Hopefully, I've answered your question, Janice. Now we go into the other market, which I am very interested. Now, 3 weeks ago, I told you do not buy this gold, do not buy the oil. Okay, but I was wrong. Okay, this move here caught me by surprise because I was thinking maybe market will drift lower into the $40 per barrel because Donald Trump himself has said that he wants to see oil at $45. Okay, so things have changed since then. Okay, so we can see on the monthly time frame. Okay, this month has been particularly strong. Last month not so much, but this month I think changes the entire outlook for oil markets. Okay, so likely to be the case. There's a potential for the market to actually end the low at $54.76, considering, like I said, the condition in the Middle East. Okay, so the move actually came last week, the week before this. Okay, we can see that prices of crude oil has shown sign to be wanting to go higher. Okay, because this bar here has been so strong, right? This week we have a follow-through buying. The market punches marginally above this resistance line, but never quite managed to close above it and close back down again. So that is of course before the US got themselves entangled in the Middle East. Okay, so for all I know, tomorrow market when it opens, it could actually get higher. All right. Right now, there is no news suggesting that Iran is going to seal off the Straits of Hormuz. But if it does, then that will be one single news enough to actually cause the market to surge. Okay. So I am definitely going to look for levels to buy. I know I missed out on the best possible price because earlier on, a few months back, or rather a few weeks back, I was telling you that this possibly looks like a three-wave move. And it's the three-wave move, it looks like a corrective move before the overall bearish trend reassert itself for lower prices below $55. But I was wrong. Okay. So now I have missed the best price to buy. I'm waiting for another chance for the market to pull back, and ideally I will be able to buy at a good price. Okay. So far, we can see that the area here, $64.70 and $64 could be collectively offering a area of support. But so far, I cannot see a good area to buy just yet. A potential area to buy could be this bar in between the flush. What I mean flush, there were one bar before it and one bar after it that was very, very strong. Okay, see this bar here? Very bullish. Okay, then there's one single bar here that forced the market before another leg higher. So I suspect this area here, anywhere between what is the surprise here? Yeah, $65.60 to $67.80. This area here could be offering near-term support. The price ever drop back, ideally in a corrective pattern into this bracket, I will be looking out for buying interest. Okay, I may even take a chance to just go in and buy. Okay. So this is the 4 hours time frame. I'll show you the 4 hours here. 4 hours time frame, you are beginning to see the start of a corrective move. Again, this move here did not take into consideration the US attack on Iran. Okay, for all I know, tomorrow market could open way above $75.52. But if it does pull back, the immediate level to buy will be this area. Okay. very similar to what I've shown you in the daily time frame. This is the 1 hour. Okay, it's not obvious here, but I can see it is quite obvious here. This single bar here. Okay. Okay, this is what I think may happen for commodities. Any question before we move to the last bit, which is Bitcoin? Okay, Raja Kumar is asking, what situation should decrease the oil price, right? Well, no. The immediate reaction is always higher oil prices. Because when we consider whether we are looking at Ukraine or whether we are looking at the war between Russia and Ukraine, Russia is a major oil producer, and the situation in Ukraine looks to be getting from bad to worse. Everybody' attention right now is on the Middle East, and of late, very little has been mentioned about the war in Ukraine. Russia has actually ramped up their operation there. Okay, after after the Ukrainian has actually struck deep inside Russia and took out a few of their strategic nuclear bomber, Russia has actually doubled down. So actually, the war in Ukraine is getting quite serious, has actually escalated. Now, Russia being an oil producer, it will actually cause prices to go higher for one. And the Middle East is even worse. Iran is the fourth largest oil producer. Although their oil has been sanctioned, but still we know there are places, countries that still buy oil from Iran, the sanctioned oil. So if the Straits of Hormuz is blocked off, it will not only affect Iranian oil export, it will also affect the Saudi oil export. Remember, there are a lot of oil-rich countries around the area here. We have Qatar, okay? We have Oman, we have Iraq, okay? All the oils needs to pass through the Red Sea. And if the Strait of Hormuz is blocked, that will be a problem. So oil prices should logically react to the upside in a situation like this, especially in the Middle East. Yes, when you look at the economic itself, yes, it means that if the world economy slows down, then there will be less demand for oil. But right now, the knee-jerk reaction to the development in the Middle East is definitely calling for higher oil prices. And it could be a strategy. Higher oil prices will actually help the United States contain China. Because China is a net importer of crude oil. And America is a net exporter of crude oil. Higher oil prices will actually be beneficial for oil exporter to the detriment of oil importer like China. So if the war actually escalates, the way I look at it, the US will be more than happy to keep oil prices elevated, okay, just to contain China. From that perspective, I think there is the possibility that US may want to keep oil prices elevated. Platinum, I have not read very much into platinum. Chin En, I have no answer for you just yet. I have not been researching too much into platinum. Platinum has been, and no, I remember in my early days when I got married, I actually bought platinum ring for my wife as as a wedding ring. Okay, platinum then was a lot more expensive than gold. So for many years now, we have seen gold prices has been running away and platinum prices have actually stagnated. So for all we know, that relationship between platinum and gold may actually come back again. Platinum is a lot rarer than gold. Okay, uh, so the usual technical commercial use for platinum, it must be very specialized equipment. Okay, if not that, very little use for platinum as as an industrial metal. Okay, but of course, they are very specialized metal group. Okay, so maybe the relationship between platinum and gold will go back to normal. Okay, right. So I finished oil. Let me talk a little bit about Bitcoin. Bitcoin surprisingly reacted negatively to the news. Okay, we have seen this is the overall Bitcoin monthly time frame. The all-time high was just a couple of weeks ago. It, uh, $111,940. Okay, that was an all-time high. And this month so far, we can see that there was no follow through buying in Bitcoin. And from yesterday onwards, I noticed that Bitcoin, in fact, the entire digital asset space seems to be following, uh, trending to the downside on the news that US has bombed Iran. Okay, so that was a little bit odd for me because when I look at digital assets, they tends to do well in times of tension. But since yesterday, I've been watching Bitcoin prices has been going down. In fact, it has been going down led not much by Bitcoin, but it was led by Ethereum. Okay, so we can see that the market right now is doing technically a pullback. This is weekly time frame. We don't see a lot in the weekly, but hopefully we can see more in the daily time frame. This daily time frame, what looks like a three-wave move may actually see Bitcoin going down below 100,000, ideally into this breakout prices, anywhere between 92,800 to 95,600. There will be a very logical area for the market to rest because this is where it started. You can see this big move here. And when you trace back the little move before that, it is this bunch of prices. 92,800 to 95,600. But on the equality basis, considering that this is an A, B, C move, the bare minimum is 99,000. Okay. So the market find support just under 99,000 is also can be explained. Okay. So this is the 4 hours time frame. 4 hours time frame is obviously in the corrective move. Okay. Three-wave move. And as we are speaking, you see the prices are coming down. Now it's a 101,400. So before the night is over, possibly you'll be trading at 100,000. The move actually, I noticed, actually happens from Ethereum. Monthly time frame, we cannot see very much. Okay, this is part of a very large potential three-way pullback. Okay, but on the weekly time frame, we can see that this move here was actually quite sharp. Last week we have a rally attempt that was capped at $2,877. No, sorry, $2,878. Okay, it ended up as a reversal bar. This week itself, the market has been coming down. But when you look at where it started to fall, it actually fall off very sharply today in reaction to the news uh, yesterday. Okay, near-term support is somewhere between 1,730 to 1,872. Okay, this is where the market starts to move. Okay, here you can see that there was a big flush. When we trace back, the origin of the move is between this level, 1,730 to 1,872. So if you're looking to buy, this could be a good area to consider. Now, the other markets that may also be worthwhile looking at is, to me, the repo. Repo has always bounced at $2. Currently, it is trading at $1.96. So if you base on the idea that $2 has always been managed to hold, then it starts to look interesting to me. But right now, it has not stopped following. This is the daily time frame. Okay. This is also moving in tandem with the other digital assets on the way down. So once the market stabilizes, ideally near the $1.60, that will be a great place to look at. Okay. So there is no support emerging just yet. So this market may actually continue to go down a bit more. Okay. Currently it's trading at just below $1.96. So if we continue to see lower prices, it has already gone beyond equality. Okay. So you can see this is equality move is no longer there. So the nearby support is anywhere here. If I can find an area of potential demand, it's going to be these two legs. Not sure whether it will go down as low. Okay, this low here is $1.77. 177.223 or 172.23. Oh, 171.95, sorry. 171.95. So $1.72 onwards, it does looks very interesting to me because I don't believe it will trade much lower because so far every time it dipped below $2, it only stay at $2 for a while before it bounced. I have not have, and I always wanted to position long in Ripple because I do expect the Genius Act, once they finally clear the House of Congress, the House of Representatives, okay, it will be passed. And that law alone is likely to be the catalyst that is going to cause a massive rally in digital assets. And Ripple, which is uh, a blockchain that has already been very mature and largely adopted by financial institutions for settlements. So they are also looking to launch a stable coin. So I think it is buying the proxies. If you believe stablecoin is going to change the global finance, which I think it will, then this is as good as it gets. I'm not going to buy the stablecoin, but I think I'm going to buy the token behind that blockchain, which is going to be Ripple. Okay, so I will be looking to see if I can buy a good price. Currently, it's already quite good, but I'll see whether it can go down below $1 and what 72. There'll be a bonus. Okay, Tanvi is asking what could be some possible reason digital assets gone down and didn't react to the war news. I cannot put a finger to it why, because logically it should actually excite the market to the upside. Okay, but the fact that it's not, I cannot find the reason why, honestly. So to me, if the war in Iran escalates, will actually be good for digital assets because people are looking for alternative. They don't trust the legacy currency anymore. So this could be one thing to look out for. Just waiting for the Genius Act to be to become law, okay, is already incentive enough for people to buy digital assets. Raja Kumar is asking, will Genius Act impact the dollar index in any way? I think it will be in competition. Okay, we have seen how the dollar index has been coming down 9%. Okay, if stable coin, if there's going to be widespread adoption of stable coin, which is seen to be the same as the dollar, although it is not technically a dollar. Okay, but they will be in competition with the dollar. So by right, they should be moving in tandem. So for all we know, if the act become law and there's widespread adoptions of stablecoin, it may actually place a floor on the dollar itself because they are supposed to move in tandem. Okay. So again, we have to see. Honestly, nobody will know the impact until it becomes a fact. Anonymous is asking, is it because people want to go to safe haven assets like gold instead of risky digital assets? There were before before gold actually took off and digital assets start to store, a lot of people talking about Bitcoin being gold. Okay, is digital gold, but nobody talk about digital gold anymore. Okay, but whether the story can be revived or whether the narrative can be revived, okay, I think there's a very high likelihood. Okay, because gold prices are really very very high. Okay, so unless you believe gold prices can go even higher. Some analysts are talking about $4,000 gold. Will it ever come? We do not know. Okay, we really do not know. So, I would think this haven buying away from US assets may actually cause some people to consider alternative assets. Maybe the digital assets may be benefiting from this change in mindset here. Tanvi is asking, BTC is a 24 hours market, including weekend. Is Ripple and Ethereum the same? Yes. All digital assets are 24 hours. Raja Kumar is asking, will the stable coin also be another fiat? It is not because it is not issued by government agency. Now, a stable coin is issued by private enterprise. In the US, only the Federal Reserve has the authority to print money, to print dollar. Okay, stable coin is not controlled by the Federal Reserve. And there's a reason why stablecoin needs to be the answer to the massive debt that the US accumulating, because foreign buyers are no longer interested in buying US assets. They don't trust the US government will be disciplined enough to control not only the spending, they believe that the budget deficit will continue to widen, especially if the Republicans one big beautiful bill get passed. Because if that bill get passed, okay, it means there is not going to be any cap on spending. In fact, the passage of that bill, okay, which have a very high likelihood of being passed, is going to increase the overall debt burden on the United States. Any nobody know for sure, but numbers like $3 to $4 trillion over 10 years is likely. And I think these people are being conservative. It will add on to the widening US debt. And right now, there is that feeling that the timing is right, where President Trump is in favor of eliminating the entire debt ceiling. You think that is a nonsense. Every few months, every administration will have to do the horse trading. So he wants to do away with the ceiling. And this time he may have sympathetic ears because some members of the Democrats, like Elizabeth Warren, is very in favor of removing the cap. So when you remove the cap, you remove all gut rails. Okay? US can sell as many debt as they can, and if they cannot find buyer for the traditional treasury, the stable coin is supposed to bring in the retail to be able to buy US treasuries. Because the way stablecoin is a proven technology and it has proven to be uh, to have demand. So what the US want to do is to bring stablecoin into regulation so that people who traditionally traditionally uses stablecoin for whatever reason, whether it's legit or not legit activity, I don't think they care. So long as it can result in people buying the US treasury, because the stablecoin is supposed to be backed one for one, okay, by US asset either in dollars or in US treasuries. Okay. The fact that every stablecoin need to be backed by treasuries alone means that every Tom, Dick, and Harry wants to have a license to print money. Because the stablecoin, if it ever come to being, okay, it's not only able to earn the treasury yield. Right now, the treasury yield, the 10 years is earlier on I show you it's about 4.375. It's above 4%. Okay. And we are looking at the shorter end of the curve because stable coins are supposed to be pegged, okay, to short-term interest, short-term treasuries. Short-term treasury is above 3%. So when you issue stable coin, you earn interest, and then you take that, you go back and issue more stable coin. So there is no cap to how much you can issue, so long as you continue to buy treasuries. So there is no cap on how much leverage you can take. So it's a free for all, very, very light regulated environment. Okay. So it's just going to be bullish. So this stable coin is going to change dramatically how the world finance is going to be evolving. Okay. So we are at that crossroad whereby something spectacular may actually happen out of stablecoin. So when you look at it from that perspective, it is a whole new thing, okay, to deal with the ability of the United States government to continue to spend, uh, 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 to issue more debt, okay. Okay, Roger Kumar is asking me again, that means a stable coin will make the government handicapped because they can't print money. It's not that they can't print money, the Federal Reserve can still print money, okay, but nobody wants the dollar as of now, okay. Stable coin is backed by something even better, which is Uncle Sam's backstopping the treasury. Okay. So stablecoin may be in competition or may actually complement the dollar. Okay. Because Trump has been trying to get rid of the Federal Reserve. Now remember when Elon Musk was part of the government, they both want to eliminate the Federal Reserve because in the States, for some reason, the central bank is privately owned. That means to say the chairman of the Fed loyalty doesn't lie with the government. It lies with their shareholder, which is the commercial banks. Okay, and Trump has been telling the Federal Reserve to cut interest rates. Every single week he mentioned that, and then you need to cut rates, you need to cut rates. But the Federal Reserve don't have to listen to the government. Okay, so I think out of frustration, either which he cannot sack the Federal Reserve, he's trying to he he, he cannot shut down the Federal Reserve. So a stable coin will be able to do that because he can bypass the Federal Reserve and get the dollar down. He has managed to get the dollar down 9% already. Okay, but now he needs people to buy the treasuries, and the stable coin is his golden ticket. All right, guys, this is what I can do for this week itself. And if anything else, I shall see you next Sunday. Thank you and take care.